So now, let's welcome another workshop, which is Fundraising Masterclass for Web3 Startups from Looi, Principal of Saison Capital. Please welcome him on the stage.
All right, good afternoon, everyone. Thank you so much, Aura, for joining me today at Vietnam. Super excited to be here. So today we'll get it here to discuss a bit about Web3 fundraising. I will share my experiences, but a couple of things that I want to run through today, right? I want to make this as actionable and as useful as possible. So first and foremost, I think it's very important if you are thinking about fundraising to understand the business model of a VC, right? Because once you understand how VCs work, then you can tailor it for them. Just like how you do customer research to understand your customers before you build a product, you need to understand investors and VCs before you can build a pitch that works for them. After that, we'll go through very quickly what a pitch deck content would look like. I think most of you here are already familiar with it, so we'll go through it quickly. Term sheet and cap table, and last but not least, of course, for Web3, we have to talk about tokens. So we're going to talk a bit about that. A bit about myself, I am currently the principal at Saison Capital. We are an early stage Web2 and Web3 VC that is still actively deploying despite the current market conditions. Previously, I built a recruitment tech startup headquartered in Singapore. We have offices in Ho Chi Minh, Jakarta, and now in 8 different countries. The company is called Glints. It's at Series D. So previously a Web2 founder. And a couple of things about myself, but that's not important. About the firm, we write pre-seed to Series B checks. So if any of you here today are fundraising, we'd love to have a chat with you either here or after the event. We write checks anywhere from 100,000 up to 3 million. Like I said, we are still writing checks because we have a strong corporate backing. And that comes from Credit Saison, which is Tokyo's, Japan's largest credit card company. For the Vietnamese over here in the room, you might also be familiar with HD Saison. That's one of our sister companies. So essentially, that's who we are. All right, so first and foremost, let's get into the meat of today, right? What is the business model of VCs? Now, how VCs work is we don't invest our own money, right? We are fund managers where we take money from sovereign wealth funds, hedge funds, the people with the real money. They give it to us as VCs, right? And then we deploy it into startups and business models that hopefully will have some exit and return a bit more money. Now, VC does not exist on its own. As most of us know, there is public equities, which affects growth, which affects VC, right? So all of this is related because the market is very different from where we were last year, right? We all know that the public equities over there has gone down. Naturally, this goes down. Over here, at some point, it will also be affected, right? So it's important to understand how the whole finance world works, where VC plays in the role of fundraising, and how everything comes all together to impact how you fundraise. Now, one question that maybe you might have is, hey, okay, we all know now the markets are crap, right? So how is that going to impact VC today, especially if you're an early stage founder looking to fundraise? So from our point of view, if you are a Series A or below, you are still okay, right? A lot of the venture capital funds in this region, both Web2 and Web3, are still very well capitalized. They have raised large amounts of funds, like hundreds of millions of dollars. So they are okay to fund you at the early stage. So long story short, if you're doing your pre-seed, seed, pre-A, Series A, you are generally okay, right? Of course, valuations are slightly lower than before, maybe more than a bit slightly, but there will still be money for you. The challenging part is really over here now. So if you are doing a Series B in the next 12 months, so anything above a Series B, that's where we start to see the challenges. Because this is where often in the past we rely a lot on US, Europe, global funds to come in. Of course, in this current market conditions, these global funds tend to focus back on their core markets, and so they don't invest so much in Asia. They are slowed down or stopped altogether. So that's really kind of the lay of the land right now, and it's important to understand that when you go out to fundraise. Okay, so once you understand that, then let's talk a bit about how the rounds look like, right? This is the typical life cycle of a startup. You might identify yourself somewhere at this part where it's still very much in the early stage. Right? There are many players out there, many VCs out there. It's important that when you go out to raise, you are very clear on what stage the VC you're talking to, right? So if you are just at the pre-product stage, it doesn't really make sense to go talk to someone like a Temasek or the Saudi Arabia fund, right? Like they are not going to talk to you. You want to focus on the folks who are up there on the top, and vice versa. Now, why I lay this out over here is important, right? You need to know who is going to fund you throughout your entire growth journey, and you also need to know, are they still funding, right? So it's very important to understand how your startup will grow, what your funding needs are like, not just for this immediate round, but for the subsequent rounds also. So this will give you a pretty good idea of who's still funding out there, and it's important that you are clear on who is going to fund you. So, a very important thing to understand is that there are many forms of capital out there. Venture capital just happens to be one of the more glamorous ones, just because the media likes to write a lot about it. But there are a lot of other different kinds of capital and financing that's available. But what makes venture capital unique is a few things, right? Number one, why do startups choose VC funding? Right? Why would you take a VC's money? Often it's because the startup success is the VC success, right? If you think about it, if you take a loan, you take a financing from a bank, they don't care whether you succeed or not. All they care about is getting their money back plus interest, right? Whereas for VC, VCs often get quite involved because their success is tied to yours, right? So on the second point, VCs often also add value to the startups because they want to drive that $1 billion return for them. Case in point, for example, for us at Saison, for our Web3 companies, because of my recruitment background, I spend a lot of time with my portfolio helping them to hire key people, so C-suite executives and key technical hires. And why do we do that, right? We do that because we really want the company to succeed. And last but not least, we also can bring different options to the table, right? So I think it's important that you understand why are you taking VC, right? And if you're just taking it so that you can get on TechCrunch or Tech in Asia to announce that you have raised X million, it might not be the best idea, right? You really want to be clear on what is the purpose, what is the motivation behind you taking that funding. Then we talk about the different stages, right? Of course, there are different stages that you're at, different amounts, different kinds of investors and traction. I think this is kind of important to get a rough sense of where you're at, how much are the round sizes, and also who, what kind of, most importantly, the traction that you must get, right? Most often you start off at the ideation stage, where it's really just nothing more than a pitch deck that you're talking about. Then, when you talk about pre-seed, usually you need some form of initial prototype